What's going on, you guys? RJ with RJ's Trades. We are back with the second free class that we're going to do. And today we're going to talk about swing trading, okay? So this is the second part of the 4 free class series for hitting 1,000 subscribers. So once again, thank you guys, and let's keep going forward, man, and hitting new milestones, reaching more people, helping more people learn how to trade in the market, okay? If you can see shapes, I can teach you how to trade, whether it's day trading, swing trading, long term, whatever you want to do, I can help you do that. All right. I've been doing this since 2019, so I know a thing or two. Okay. All that you do is leave a like, comment, and share this post or this video with someone that this may help. So today we're going to talk about swing trading, and swing trading is for people who may be busy during the day, maybe you work a 9-to-5 job, or maybe you just don't want to look at the market forever. You don't want to day trade, and that's perfectly fine. So I'm going to tell you guys exactly how I swing trade, right? And I swing trade 2 different ways, all right? So I have a couple different strategies for momentum trading, right? And I have a strategy for buying the dip, right? So I have a couple different strategies for both. Whichever one fits you is just going to be the one that fits you, okay? So whichever one you like to do is what you want to take and run with, all right? It doesn't matter to me which one you take. You don't even have to take what I give you, okay? How I made my strategies, I just pieced together bits and pieces from everybody else, right? So there's nothing new under the sun when it comes to trading, right? So I learned different things, watching videos, seeing other people do this. I say, okay, well, I like how he does this. So I'm going to put this in my strategy. I like how he does this. I like how he does this. And I just made it into my own, something that I can understand, all right? So that's all that you really have to do, okay? Before we begin, man, I cannot begin this without mentioning AMD, all right? So AMD has been on the weekly watch list for a couple of weeks here, and you can see AMD absolutely blasted. They had news that they were going to be supplying OpenAI with a bunch of chips, I believe. So yeah, that play is officially over. So it is what it is. All right. So AMD absolutely blasted. If you make money off of AMD, let me know in the comments, man. Let me know in the comments. All right. I don't know what to say. This is a life-changing play right here, right? A lot of people have been sending me DMs this morning about how much that has helped them, right? So that's amazing. All right. Let's get into it, man. Swing trading, right? So you're busy. You don't want to set charts all day, whatever the case may be. Maybe you just like swing trading. I love swing trading. Swing trading is my first love. So let's get into it, man. We'll first start off talking about the basics of swinging, right? So swing trading and day trading is different because swing trading, you're not expecting something to hit right away, right? So a swing is like a move from right here to here, or here to here, or maybe a down move, right? You're not really looking at a swing to hit in a single day. You're trying to catch a large move, okay? Now, the great thing about how I'm going to show you guys this is my swing trading strategy. If you learn the first strategy, like the basics of everything that I do, is literally the same. The only thing that's pretty much going to be changing is the contracts, right? So I'm going to talk to you guys about contracts and everything of that nature, okay? So first of all, number one, when you're looking to swing trade, and once again, please, I'm saying it one more time before we begin. Once again, if you have not watched the first class, please watch the first one, because if you don't watch the first one, you're not going to understand what I'm talking about here. All right? Make sure you watch the first one, okay? Number one, when you're looking at swing trading, you have to, number one, before you do anything else, is understand the overall direction of the stock market, okay? Number one, okay? How do you do that? You have to look at SPY and QQQ. A lot of time when people say the market, quote unquote, they're talking about SPY and QQQ. All right. The reason for this is because SPY and QQQ hold pretty much the best stocks in the market, right? So your Apples, your Nvidias, your Amazons, your Broadcoms, did we talk about AMD? All of those major stocks are in there. So a lot of times if SPY and QQQ are up, your main stocks will be up, okay? So you want to pretty much be trading on the side of SPY and QQQ. If SPY and QQQ are bearish, you want to more so be looking bearish, for bearish plays. If you are on the bullish side of SPY, you want to be looking for bullish plays, okay? So if we just, for instance, take a look at where SPY is right now, right? And I'll just be talking just specifically of where the stocks are now. We can obviously see from the daily chart right here, the trend is a uptrend. Okay, so we are in a crazy uptrend. We're pretty much at all-time highs, and basically there's no reason to be bearish at the moment, right? Yes, could you drop down? Yes, you could drop down, but even if we drop down, we won't be bearish. It'll be quite some time before the market is quote unquote bearish again, right? So if anything, you would be looking to either trade the breakouts, right, which I'm going to show you a couple different strategies for, or you want to have a couple of buy the dip strategies, okay? I'm going to show you a couple of those, all right? So number one, you have to find the overall direction of the market. SPY, bullish, QQQ, bullish. How do you know? You can see a very clear uptrend of higher highs and higher lows right here, very, very clearly, all right? So once you find whether SPY or QQQ are bullish or bearish, okay, then you need to secondly go through the individual stocks and ask yourself a couple different things. Number one, does this stock have a bullish setup, right? So such as a bull flag, bull pennant, inverse head and shoulders, or if SPY QQ are bearish, you'd be looking for bear flags, bear pennants, regular head and shoulders, rising wedges, things of that nature, okay? You're looking to see if the stock has a particular bullish or bearish setup, depending on SPY and QQQ. Then you're looking for if it's near a key level. That's important. So you're looking for those two things, okay? You're looking if it has a bullish or bearish setup, depending on, your bias, and you're looking for is it near a key level. Now, what I will tell you is a stock can still be good, a very good swing, even if it doesn't have a bull flag or, your traditional chart patterns, all right? Really with swing trading, and we're going to talk about momentum trading first with swinging. Really with momentum trading, you're looking for a stock to have a nice run up. You're looking for a consolidation period, and you're looking for the next blast, right? So that next blast is you're looking for the spot where the stock is most likely to take off, right? Because with options, you are not only hindered by the direction, you have to have the right direction, you are also hindered by the time, all right? So you can't just say, all right, well, this stock like it's going to keep going. Being late or being way too early is the same thing as being wrong in options, right? Being too late or being too early is the same thing as being wrong. All right. So how do you time this stuff up, right? It's a very particular thing that I love to do. All right. So once again, we're talking about momentum swinging first. All right. So if I'm looking here, I notice that SPY and QQQ are bullish. We're at highs. There's no reason for me to be bearish, right? So if I'm looking to play a momentum play, I'm looking for bull flags, bull pennants, inverse head and shoulders, or I'm looking for a stock that is near a resistance. Okay. I want to look for a stock that's near resistance, and then I want to see how far can this thing go. Okay, that's super important. Your important questions is, you have three. Number one, is there a bullish setup or bearish setup depending on your direction? Number two, are you near a key level, which if we're bullish, we're talking about a resistance. And number three, how far can this go? AKA, where is the next key level? Okay. Now, I'm going to show you an example of a play that looks really, really, really good right now. That's actually kind of playing out. If I can think of it, was Rocket Lab. I can't even do it right. There you go, Rocket Lab. Okay. So Rocket Lab is a stock that was on the watch list, and it's doing very well right now. Let's talk about why. Okay, so we know that the overall market is bullish. Okay, boom, we got that. So when we're looking through stocks, we're trying to see, is there another stock that is bullish already or is about to become bullish again? Okay. Okay, so you want to look for those stocks that has had a nice run up and that is consolidating. Okay, so you can see Rocket Lab have a nice run up. You can see it's kind of been just consolidating inside of this box. Okay, now like we said, you then are looking for what point does this stock need to break to send us to the next level. If you take a look here inside of this consolidation box, we can say that Rocket Lab has had a tough time holding above right around this 53 level. Okay, look at this 53.43 level, right? And it's not perfect, right? So I could move it up just a little bit. It's not gonna always be perfect, but right around 53.5 to 54, right in that area is a resistance, right? You have rejection up in here, rejection here, rejection here, right? So you got 3 rejections right there from July, okay? So what you're looking for is the stock to finally break and close above that, right? You're looking for it to break and close above this level. Now, when you're swinging, I don't like to wait until the end of the day. I think a lot of times when you try to wait until the end of the day to get in, a lot of times you will miss the move, right? There's a formula or a couple different ways that you can kind of test the breakout, right? So one way is to, once you find out, where's the point that you want to get in, and just for reference, this stock is at all-time highs. So you really don't have another level to go off of at the moment, right? Really the only thing that you can possibly even do is to take the length of the pole right here and place it at your breakout point, right? Which says that this breakout is supposed to go to 80 plus. Crazy, but that's what the chart says, not me. Okay? So once you have your place of interest here, once you see the stock closing above that level on the 5-minute or 15-minute, whichever one is your choice, you can typically set your stop loss at the low of day, right? So for instance here, and yes, sometimes you will get stopped out, but it's all a part of the process, right? So at this point right here, let's say we was looking at this on Friday. This is when it broke out here. Notice the stock pushed up right to this point and rejected. You don't supposed to enter there anyway, simply because it didn't close above at all. Didn't close above, right? If you take a look right here, once it got back up to this point, it closed above and started flagging above the level. That's actually a really good sign, okay? So you could take your entry up in here and your stop would be at the low of day, right? Now it has to also make sense, okay? So since we are using a stock right here that has no ceiling at the moment, right? So we don't know how far it's gonna go up. You can be a little bit more risky at the highs. Me personally, I like to be a little bit more risky at the highs when you don't have anything to go off of, because this thing can just keep going. Like at this point right now, the stock is up almost $6 from this point right here of resistance, right? So in reality here, if you were to use the low of day as a stop, you're pretty much risking right there, you're risking $2.88, right? To possibly get, at this point, you really don't know. But you want to always kind of have at least a 2 to 3 risk to reward, right? So you want to be bare minimum targeting at least a 2. And really, if you can get a 3, that's even better, right? So bare minimum, you want to be trying to get a 2. All right. So here, for this example, you would have not gotten stopped out at all. Yes, the price would have fluctuated. Yes, it's kind of bouncing up and down, but it's no reason to sell, right? Now, as the stock starts pushing, you kind of want to start moving up your stop, right? So it's a couple different ways that you can go as far as trailing your stops. And the first way that I kind of like to do, this is just a rule of thumb for me, and I sometimes break it too, and I pay for it every time I do, is once I get up 20 to 25% on a trade, I will move my stop up to break even. Okay, that's one way to do it, because the number one thing in trading is to protect your capital. You can't protect your capital if you just blindly holding. Okay, you have to have a strategy for entering and exiting. So that's one thing that I like to do, is to say, okay, I'll get up 20-25%. I like to set my stops at break even and trim. All right, it's a lot harder if you're holding one contract though. You know, so it's a lot harder if you're holding one contract. You kind of have to use your best judgment there. But if you have multiple, always trim. You know, you want to trim on the way up, because you never know what kind of news could come out. You just don't know what can happen. All right, you just got to always protect yourself. Okay. Now, another way that you can ride the wave, right? So let's talk about what we have here. What we have here, we had RKLB, RKLB that broke out. It was holding at the level and pushed above, right? So how do you know that this thing could possibly continue? Well, as you guys know, I'm not a huge indicator person, but one way that I have found that is pretty reliable as far as seeing the strength of the trend here is the 8 EMA on the daily. Now, I do like using the 8 EMA on the daily just to see how, you know, how strong the trend is. Usually if the stock is holding the 8 EMA on the daily chart, it has the possibility to continue. Okay, you kind of see here in this consolidation, this is exactly what you expecting in consolidation. It's just popping up above it and below it, above it and below it, and at this point now it's kind of just holding above, right? So it's doing really well right now here. Okay, so you kind of want to use the 8 EMA as a guide as to say, okay, this thing could dip down, right? So if it comes down to 56, it's still very bullish. It's still holding above the 8 EMA. Technically here, you aren't bearish until you close up below 52 again. But that's $7 away, right? Do you really want to hold down $7 on a stock like RKLB? That's more than 10% of the stock, right? So, you know, you have to use your judgment as to whether you decide to use the 20-25% and set stops at break even method, or if you're going to use the method of as long as it's holding the 8 EMA, then you're going to hold it. Okay, now let's kind of review this one more time, because I know we're going kind of quick here because I'm trying to show you a live example here. First, you're looking for the overall direction of the stock, right? So we're talking about momentum swinging or breakout swinging. All right, you're looking for the big moves. Okay, you're looking for the big pops. All right, and we can even throw on another important thing here that you need is volume, right? You can even throw on your volume here. If I can take one of these off, and what you like to see, and what you like to see here is you like to see volume increasing as you start to break out. So notice here, look at the volume right here on this move up. Look how high the volume got. Look how low the volume got here. You did have spikes here, but for the most part, volume dropped off in this consolidation, and notice that we're trying to pick up volume again. Okay, so you're using a mixture of different things. The same way that I talked about before, it's all about probability. It's literally the same exact formula, right? It's the same exact formula for my swings and day trades when it comes to momentum. Okay, you're using multiple things together, right? You're using your level. What place can this stock break out? How far can this stock go? And how can I hold this stock, right? So that's the one part about swinging that's toughest, is holding it. That's the tough part, right? So you got two methods to hold. You can either use the 20-25% and move your stop up to break even, or you can use the 8 EMA, right? That can act as a support, you know, if it comes down, right? Let me show you guys another one here. Another one that has a pretty good example right now. Has a pretty good example at the moment here. And I really like this one, is Apple. I think Apple's going to be the next one to go. All right, so I'll show you guys what I'm looking at here on Apple, and I really like it. Okay, so you have Apple right here. Notice, what did I say? Let's talk about it again. How do you identify a possible good swing? Well, number one, identify the overall direction of the market, right? The overall direction of the stock market is bullish. Since it is bullish, you're looking for bullish patterns, or you're looking for stops that are near resistances that have room to go to the upside, okay? Now, if we take a look at Apple, this is actually a setup right here called a ascending triangle. Okay, the ascending triangle is a bullish chart pattern. It's formed that because it has a flat top resistance and it has a rising trend line. Okay, so this is a bullish chart pattern, and I want to keep Apple on watch because the overall market is bullish. I'm not looking to go short on Apple right now, even though it's near a resistance, right? So this is the previous all-time high. Even though it's near resistance, I want to bet on the upside of Apple because the overall market is in breakout mode, right? We're breaking out again today. Okay? So until the market proves me wrong, I'm going to stay on the side of the overall market. Okay? I'm not going to fight the trend. The trend is going to be your friend until the end. Anybody that's been trying to short since March or April, they've been getting killed. Okay? They've been getting killed. All right? The trend is your friend until the end. Okay? So let's go through it again. What things do we look for? We look for the overall direction of the market. We know the market is bullish. All right? We're finding a stock that has a bullish setup or near a resistance. Apple has both. Okay? And just to show you guys that I'm not telling you a lie here, let me show you guys the ascending triangle pattern here. Okay? Ascending triangle pattern. This is exactly what it looks like. You see, flat upper trend line, rising lower trend line, uptrend, trend continuation. Take a look at Apple right here. Rising up, flat top resistance, upward trend line, and you're looking for it to possibly continue upward. Now, the reason that I really love this play is because Apple is near all-time highs. If Apple breaks out, so at this point, it really needs to break and hold. It needs to break and hold above 259, right? If it can break and hold above 259, this thing should be gone. Okay? Now, what was that last question that I said that you got to ask yourself is how far can this stock go? Is it worth it to play? If a stock only has a dollar move before you get to the next major resistance, that's not worth it. Okay? But let's take a look at Apple. We know Apple, yes, you got the all-time high here, but if it breaks that all-time high, where's the next move? Right? So let's say I want to take, once again, you don't have anything to go off of from the levels wise besides the all-time high. That's the only thing that you have. So if you want to use the length of the pole, right? So the impulse move before the pattern was formed, if we take the length of that and put it at the breakout point, this says that Apple's supposed to go to like 290, right? That's if we take it from this bottom part here. Now, if we were to take it from this part here, which I don't mind either, you still have 280 on Apple, right? So this breakout is saying we're supposed to go to at least 280, max 290, all right? Which is a crazy move. That's a crazy move on something like Apple. That's going to push the entire stock market up because Apple is a stock that is heavily weighted in SPY and QQQ. Okay? So, how far can it go? You got $20+ of room, right? Is that enough for you to make money on Apple? Of course it is. Anybody that tells you no is lying to you, okay? So you have a $20+ move that's possible here. And you may say, well, RJ, you know, this is kind of a red day. And I got in on Friday. You say, well, why do you feel comfortable holding at the moment? At the moment, I feel comfortable holding because if you take a look here, look at my 8 EMA. Take a look at Apple. As long as Apple is holding up here, you're good, right? You have to have a system, right? So one thing that I hate doing, so I like to use it as far as my take profit, but I really hate doing as far as my stop loss. I hate using my percentages as a stop loss, right? Because there are times where you can be down 15-20% on a stock and the stock is still good. The stock may just be consolidating, right? You got to think we are swinging, right? So you're expecting a bigger move. A swing is a large move, right? So these little fluctuations during the day, you don't really want to get phased by that, okay? So if you take a look at Apple here, we're in the triangle pattern right here. We keep holding this EMA. So if Apple closes below here, the play is done, right? The play is done and it's going to be a loss, which is absolutely fine as long as your risk is defined. All right. So at this point right here, if I take a look at what I'm expecting to get on Apple and my stop here, right? So I got in on Friday and I got in around right around 258, right? So if my stop is right here, I'll even give it a little room. I'll give it a little room. Let's say I put my stop there, a little bit below the EMA, and I've already told you guys and showed you that we could possibly get 280, max 290 on Apple. This is already a 6 risk to reward, right? So you may say, well, you're risking a few dollars here. I'm risking a few dollars, but look at the move. This is a move that could go absolutely crazy, okay? This is a move that could go absolutely crazy. It has the setup. It's holding the EMAs. This is a move that can go parabolic, right? So this is all that you can ask for. It's the probability, all right? Do you still have a chance to lose? Yes, but the probability says that you're going to get the move on Apple that you want. It's not to say that it's not going to mess you up, not to say that news ain't going to come out and mess it up. It's all probability, all right? You got to let the chips fall where they may, all right? So that is Apple and RKLB, okay? So those are two examples of momentum plays, breakout setup. So I'm going to show you guys one more breakout play, and I'm going to show you one that has already happened, okay? Just so you can see exactly what I'm talking about here, all right? And once again, make sure you guys leave a like, comment, and share this post, man. We got 2 more classes after this. If you are confused by any of the concepts we're talking about, make sure you guys go back and watch the first class there. And I literally explained everything. I use pretty much the same exact stuff in every single trade. I'm using chart patterns. I'm using candlesticks. I'm talking about levels. You understand those 3 things with me, you'll understand everything that I do. Everything that I do is on YouTube for free. I don't gatekeep anything. I do have a private Discord, and that's just for if you want my expertise, my live breakdowns and everything else, right? Everything I do is on YouTube for free, okay? So let me show you guys one more example here. And this is a play that we banked on and that I'm so mad at myself that I didn't hold the whole way. Johnson & Johnson, all right? This is a play that went absolutely crazy and fit our breakout / momentum swing trading criteria perfectly, okay? First of all, when you're swing trading, you always have to zoom out. You always have to know what's going on in the past, okay? Because all we're doing is using the past to determine what's likely to happen in the future, all right? If we take a look at Johnson & Johnson here, take a look here back from 2022, all right? Back from 2022, this trend line has been terrorizing Johnson & Johnson. Every time it has gotten up here, it has been getting rejected, okay? So notice here, we finally broke out. So not only was Johnson & Johnson forming our pattern that we want to see, it was already breaking out of a downtrend that's been being held down for 3 years, okay? So if we take a closer look here at Johnson & Johnson, notice all we had to do was wait on this thing to break out, get our entry, and go, okay? So let's think about what we already talked about, all right? We need to, number one, understand our overall direction. You know, the market has been bullish since April, March, April, right? So market direction is bullish, okay? We got our breakout here. Where are the levels? How far can this go, okay? So the first level I had is 180.26, which is right around up here at the top of this bull flag pattern. And the next was 186.64. which is the top of this 2022 high right here, okay? So my entry strategy at this point was to say, okay, because I missed it on Thursday. My entry strategy was to say, okay, if we get a dip down, I want to see it hold this breakout, and we'll get in and we'll use the low of day as the stop loss, okay? So notice I got in right here, and the stop loss was right there at the lower day, which was absolutely perfect because if it would not have held right here, it probably would have fell right back into the pattern. which would just make this, consolidate even more. Okay, so that was a pretty perfect entry model right there, which it just absolutely blasted. It blasted through the 180.26 and even blasted through 186. And even if we throw on our 8 EMA here, it hasn't even touched the 8 EMA again. So notice that it popped above the 8 EMA here, popped above right there, and didn't touch it again yet. Still hasn't touched it again. So that was a picture perfect play. Probably the best looking breakout trade that I've called all year. That was absolutely perfect, and everybody banked on it. So that was amazing, right? So bull flag pattern, breakout, got your levels. Everything here is confluence, right? So notice everything that we talk about is putting these things together. So if you don't understand the concepts from video 1, you're not gonna understand this. I don't do anything that's hard, guys. I use the basics. I put them together to put probability in my favor. Okay. So now let's move on to the buying the dip swing trade. Actually, no. Let's do one more. I'm going to show you guys a swing that I'm actually waiting on now, okay? So, lift. Let me show you guys lift, okay? This is another live look here. I'm not in this yet, but this trade is shaping up perfectly, all right? So, you have lift right here. Let's look right here. Let's zoom out and see what's going on. Very similar to J&J. We have this trend line that's been holding it down for over a year, and it finally broke out. So now that we've broken out, look, we have our run and we have our consolidation that's forming our bull flag pattern. But look, at this bull flag pattern, it has came down and started holding right here. What is this 21.79 level? If you take a look here from 2022 and in 2020, this was a support in 2020 and it was a resistance in 2022. So now it's turning into a support again. So remember, our levels are called key levels because they can act as a support or a resistance depending on where it comes in contact with it at. So you have a bull flag pattern and you have it forming a support at the previous resistance, okay? So that is great news because if it breaks out, notice that I have a level right here in yellow at 23.5. Okay, so now we're getting into our third part. How far can this thing go? Okay, I have a level at 23.5 right here, but notice, always zoom out. Okay, 23.5 is the top of this flag, but if you take a look here, you will notice that you have a gap all the way up to $30. So you have a $7 gap on lift. Okay, so it's like a what, 40% move. Maybe my math may be a little off, but a crazy move as far as percentage wise on lift that you can possibly have from catching this momentum play breakout. Okay, so how would I look to enter this? I would look to enter this on the break of this trend line. Okay, so I would be a little risky and take the break. Probably looks like it's around 20. I would take it above 23. I like it above 23. So above 23, I would love to take this and to take my chances on this thing and see if we can get this breakout here. Okay, so I love this play. I'm not in it yet, but it's forming, it's there, and it's absolutely perfect. All right, so before we move on to our other type of swing trading strategy, let's talk about the contracts. Right, so the contracts as far as when I'm momentum swinging, right? So when I'm swing trading and trying to catch a breakout, I like to go 3 weeks to a month out. And the reason for that is because 9 times out of 10, it's not going to take you 2 or 3 weeks to find out if a stock's going to break out or if it's going to fake out. It's going to do one or the other most of the time, okay? And usually it's going to do it pretty quickly. Sometimes you can't get caught in consolidation, but usually it doesn't take a month to find out if the stock is going to break out or if it's going to be a fake out, okay? So I like to go 3 weeks to a month out on my contracts, usually when I am looking to momentum or breakout swing trade. And as far as the contract details, you don't want to go too far out of the money, okay? Don't go too far out of the money. Like, for instance, something like Apple, if Apple is breaking out at 260, don't go get a 300 call. That's too far, all right? Stay within, the range there of $5, $10 max on something like Apple. Something like Lyft, you don't want to go for. You actually want to get in the money, right? Because Lyft is not something that's gonna move $5, $6 in a day. Okay, usually it's gonna move maybe 50 cents to $1, right? So the contracts are going to be cheaper on Lyft, but that doesn't mean that they are worse. Okay, it doesn't mean that they're worse. The contract prices are relative to the stock and how much the stock moves. If Lyft was $100 stock and it moved $5, $10 a day, it would be the same price as Tesla, right? Those contracts would be the same price, just about. Okay, so I like to go through it to a month out. Make sure you guys get time on it, but you don't have a breakout trade. Is not something where you have to get months and months and months. Okay, that's for when you want to buy the dip. Okay, which we're about to talk about here in just a second. Before we get to it, make sure you guys leave a like, comment, and share. This is the swing trading class. You got a 9 to 5. Don't like day trading. This is for you. Okay, so I promise you guys that I got a couple different types of swing trading that I like to do. So we talked about the breakout swing trading, which is I would say it's kind of closer to the day trading aspect of what I like to do, because I like to catch the momentum of it. Now we're going to talk about a safer way to swing trade, which a lot of you may like even more. And this involves buying the dip, okay? So we're going to be using the same basic concepts, right? We're going to be still using chart patterns, key levels, candlesticks, okay? Those three things, you understand those three things, you can do almost anything that I do. I don't hold back on anything that I do. Everything I have is completely free here on YouTube, okay? Let's start with, let's get an example here. A good example here, let's show you guys here, is on Lulu, right? So you see I already actually have it here. So we're going to talk about it here, and I will talk about it while I show you. When you're buying the dip on a swing trade, I typically like to buy the dip on stocks that have fallen a lot, right? So stocks, something like Lululemon, look here, the high is $516, right? And that's just for last year. You see right now it's at 174, right? But you want to buy the dip on a swing trade on something like this when it gets to a key level of support, okay? How do you find those super key levels of support? You have to get on your daily and your weekly chart, and you have to look to the left, okay? You have to use what happened in the past. Take a look at what happened in the past, and you have to prepare for that to possibly happen again, all right? If we take a look at Lululemon, notice that I have a line that Lulu bounced at right at 162, okay? Notice I have a line that Lulu bounced at 162 and went all the way up to 181, right? So a over 10% move on the stock right there just from having this level. Now, what is this 162? Take note that the last time we was down here at 162 was the COVID lows, which some people count the COVID lows, some people don't. Whether you do or not, hey, it's on you. All right? The last time before that was actually 2019 in 2018. So 2018, this exact spot was a resistance for Lulu. 2019, this spot was a support for Lululemon, right? So notice we call it a level because it can be a support in one place and a resistance in another. So notice it was a support in 2019, a resistance in 2018, and now in 2025, it was a support, okay? So number one, you're looking for these stocks to fall to really key levels of support, okay? Now, you may say, okay, well, RJ, how do I know how to get in or when to get in, okay? You have to put together your concepts, okay? Notice everything that I'm saying is tying together, right? Put together your concepts, right? Or levels or candlesticks. So what type of candlesticks tell you that buyers are stepping in on the daily chart? You are looking for bullish hammers, you're looking for pin bars, you're looking for bullish engulfings, right? You're looking for that volume to start to slow down. You typically want to see something like that when you're getting near the key level, okay? You want to see that selling slow down, okay? So if you take a look at Lulu, it came down here and it actually gave you a little bit of a hammer pattern right there. Came down just a little bit more and ended up popping, right? So buyers did step in on it, which right up in here, buyers stepped in. You see how high these green candles were here. And look at the volume a lot lower here on this little dip below before it took off and the volume raised a little bit again. Okay. Now, so you want to use your candlesticks, you want to use your levels, use those in conjunction of each other. But let's add one more thing that's going to really add to the probability that this stock is going to give you a nice pop or a nice swing to the upside. Okay. Now, this is another chart pattern, and it's called bullish divergence. If you've been watching me for a while, if you've traded with me before, you probably know that I've been talking about bullish divergence for years. Okay. It seems like it's getting more popular now, which I'm glad, because it is amazing chart pattern for buying a dip. What is bullish divergence? Bullish divergence is when a stock price is making a lower low, but the RSI is making a higher low. Okay. So what is the RSI? The RSI is an indicator that pretty much tells you when a stock is considered overbought or oversold. Usually the stock is considered overbought when it's 70 plus on the RSI, and it's considered oversold when it's 30 and below. Now, this bullish divergence is very, very crucial, and it's easy to spot because usually when a stock is making a lower low, the stock price also goes lower. But when you see that stock price make a lower low and the RSI makes a higher low, such as here, look at how this slants down, but this slants upward. That's when your antenna should be going out and say, okay, I need to be checking here to see, are we near a key level? What kind of candlesticks am I getting? How's my volume looking? We're using all of this in conjunction with each other here, okay? So if you take a look here, you had the bullish divergence. You fell right down to a super key support that you haven't been at to since 2020, right? And before that, it's 2019 and 2018, okay? And you got a very nice pop, all right? Very nice pop there. So that is the best way to swing trade the dip, is to use bullish divergence in conjunction with falling to a key support. All right, let me show you guys another example. What's another one here? Let me think. I don't want to give y'all this one because I'm actually looking at this one right now, but I'll do it anyway. I already showed y'all this, so we'll do this one. This is Target. Okay, now let's take a look at Target. This is the butt naked chart of Target here, okay? So you might say, okay, well, RJ, why are you looking at Target, man? Target has been getting killed. You right. But let's take a look at where Target is and what it can possibly do. The high is way up here above 250, and right now it's at 88. Okay, so I'm not saying that I want to invest in Target forever for the long term, but I'm telling you that it has a very nice opportunity to get a good bounce. Let's first of all take a look at where Target is. All right, if we take a look at our levels, if I was to make a level here, look at this. Look at this right here. Look at this right here. Support. Look at this. 2020 support. 2019 resistance. 2018 resistance. Does it go back even further? It might go back further. All right, it doesn't. It does, but okay. So we got this has been a key level here, right around 90.5 has been a key level since 2018. So we have fallen to a key level that has been here since 2018. And just notice that it's not going to always be just super perfect. Let's just draw a little box here just to say that it's the area, right? It's the area. It's not going to always be super duper perfect. Okay, so now we know that we're at a crucial area of support. Now, what else are we looking for? We're looking for the candlesticks, and we're looking if we possibly have bullish divergence. Okay, now we'll take a look at the candlesticks here. You don't have any super bullish type candles, but you do have a lot of long bottom wicks starting to form, okay? And if you remember our candlesticks explanations, long bottom wicks typically start to signal that buyers are starting to step in, okay? And this is the daily chart, so each candle represents a whole day. All right, so you got a lot of long bottom wicks here, here, it's kind of showing you that buyers are starting to step in. Okay, so you have the candlestick starting to form there. You have the stock falling to a major place of support, and if you take a look, what else do we have? What is the stock price doing? Making a lower low. What is the RSI doing? Making a higher low. So not only are you falling to a key area of support from years ago, you are also at a place that you are forming bullish divergence, okay? Lower lows on the stock, higher lows on the RSI, okay? Now, sometimes when you're doing this, you don't want to just hop in. When you see this, you typically want to coordinate with the level, okay? So I would typically probably say we need to close, or we need to get above 90.4, because you can see here that 90.4 has also been getting rejected. So it may form a little bit of a range here, but I would love to take target above 90.47 here at this resistance to possibly take it back to the upside, and the stop would simply be right here below this low point down here, because if it gets under that, it's going to continue down more than likely, right? So that's a play that's picture perfect, right? So notice that it's the same exact setups but a different stop. This is why I love to trade the setups, because once you learn the strategy and the setup, it doesn't matter what the stock is, you can trade it. All right? So learn the strategy, okay? Learn the strategy, learn the basics, all right? You got to be able to walk and crawl before you can run, all right? You have to learn the fundamentals before you can start to put them together and learn the strategy, all right? So that's another example of picture perfect fall into an area of support here with bullish divergence. The probability here is saying that this stock is going to pop. Is it saying that it's going to go all the way back up to the highs? We don't know, but it probably more than likely will give you a very nice pop that you can make money off of on a swing. Okay, I'll give you guys one more here. One more. Let's see. UPS, right? This is another one that I've been talking about for a few weeks now. UPS, what do we have? Notice I have a level right here that says 2013 level. That's right, from 2013. Notice my line right here was a support here. It bounced off of it right here in 2020, which is the COVID lows. And if you look back here, it was a support right here in 2013. So this has been a key level for 12 years. So it's going to take a lot for this stock to break down under a key level that has held for 12 long years, okay? So put the probability in your favor. We're down here at a key area of support. We haven't been able to break it since 2013. If you look how far we are down from the highs were at 230, 231. We're down to $86, so we're way far away from the highs. And look at our buddy here, bullish divergence. Lower lows on the stop price, higher lows on the RSI. Okay? And you can notice that this one has already started to kind of pop a little bit here. So this one actually gave 2 chances to get in here. Look at this candle right here. Very nice candle right there. And then it gave you another chance right here with a little bit of a bottom wick here. It gave you a couple chances where it fell back down. So hopefully we can see UPS kind of start to trickle upward here, okay? So now let's talk about what type of contracts do we like to use as far as swinging when it comes to buying the dip. So when it comes to buying the dip, I typically like to get longer options than I do when it comes to playing a breakout, right? Because sometimes the stocks can get down to a support and it can consolidate. So you want to take that into account. So I typically like to go 2 months minimum. I typically like to go 2 months minimum when I get my my signs that show me, okay, it's time to get in, because I want to give it time and give it room to, work itself, all right? I want to give it time to work itself. Some people like to say you just grab leaps. Now I've been talking to a lot of different people, and all they want to talk about now is leaps, leaps, leaps. Leaps are very popular this year, but let me tell you, leaps are not always the best thing to do. A leap does not guarantee you that you are going to make money. You're not guaranteed to make money with a leap. Okay? Some people think if you just buy a leap on anything, you hold it, it's going to make money. That's not the way it works. Usually you want to buy leaps on stocks that have been beaten down like crazy, right? So last year Tesla would have been a good leap, be beaten down all the way down to 140. UPS and Lulu actually happened to be good leaps this year because they have been beaten down so much, right? You don't want to get a leap on something that's down 2 or 3% from the highs. That's not what you want to do. You only want to get leaps on stocks that have been beaten up significantly. All right? That's the only time you want to get leaps. And you also want to get a leap when the market has a nice bullish structure, okay? So kind of like we have the type of market that we have now, bullish plays are good, right? So you're more than likely to make money on a bullish leap because we are in a bullish market, right? A super bullish market at that. Okay. So with these dip buys on the swings here, I like to get at least 2 months on these just to give it time to work. And you'll be surprised at how many times these things actually take off, right? So a lot of times these things come out of nowhere and just blast, right? I think about another example here that I played a while ago. CNC. CNC came straight down here, right? Straight down to this key level at 25.62. Take a look at that. This is absolutely crazy. Look at this key area of support here from 2016. So almost 10 years ago since it had came to this spot. Got down to this point, and look at it. It just absolutely blasted, right? And this was August. So imagine you get a 2, 3, 4 month contract out. You get it in the money. You swimming in profits right now, right? So, yep. Bullish divergence, use that in conjunction with the support. That's a deadly combo, okay? It's a deadly combo. So that is pretty much, that's pretty much it. That's what I like to do. I like to keep things very simple. Like I keep a certain criteria, and if I don't see it, I'm not trading, right? So notice I'm not giving you guys 10,000. Oh, maybe this can, maybe. I'm not telling you that. I'm telling you guys exactly what I do, exactly what I look for. Notice that these examples that I'm showing you, these are the exact same setups, just different stocks. I'm not the type to throw 1,000 different shots. I'm gonna shoot the same shot. If I like to shoot in the corner, I'm gonna keep shooting in the corner. I'm not going out there to the wing. I'm not going out there in the middle or going to the logo trying to hit a 3 like Curry. I'm staying in the corner and I'm waiting until the ball gets past me in the corner. That's what I like to do. That's my shot. Those are shots that I take. All right. So once again, if you guys have not watched the first video, make sure you guys go back and watch the first one, because everything that we talked about here just built off of the first video, and the second video and the third video and the fourth video will just keep building onto each other constantly. Okay. I put these things in this order for a reason. All right. So the next class, we're actually going to talk about the break and retest setup, right? And I couldn't tell you guys about the break and retest because you didn't know the basics and you didn't know about swing trading, okay? So now that you understand those two, the break and retest are going to be, it's going to be a lot easier to understand once you understand class 1 and class 2. So I thank you guys for tuning in, man. I did have some technical difficulties, so you may see a few cuts in the video. Some of the stuff I wasn't recording the right way, but hey, it is what it is, man. We got it out to you guys. I gave you guys this. Once again, this is exactly what I do. I'm not hiding anything from you guys. The strategies may seem simple, but I promise you, you have to understand the basics. If you don't understand the basics, you're not going to get this stuff, all right? And one thing I want to leave you guys with is to put up the shots, okay? I don't care how many videos you watch. I don't care who your mentor is. I don't care the quality of the videos. I don't care. If you're not practicing and taking these real trades, you're not going to get better, okay? And I'm going to say this. Some people like the paper trade. I'm going to tell you, get off of the paper trading, all right? Get off of the paper trading. Size down if you want to practice it, okay? Get skin in the game. All right. The best way to learn something is to actually do it, not to keep watching it forever. Sometimes you gotta take the training wheels off and get dirty. All right. So I hope you guys enjoyed this. Once again, next Monday we're gonna have part 3, the break and retest strategy. Make sure you guys watch part 1. Watch this at least 2 to 3 times so you can understand it and get it. Leave me a comment if this is helpful below. I gave you guys 2-3 different swing strategies. I gave you like 2 or 3 for the breakouts, and really the only one that I use for buying the dip. All right, this is really all you need, man. This is my recipe to success in the stock market. I just wait on these things to come to me and then I trade them. All right, so hopefully this is helpful. I'll see you guys next week, or actually I'll see you guys Sunday for the free Sunday watch list, man. So appreciate you guys, and I'll see you later.